The information in this podcast is educational and general in nature and does not take into consideration the listener's personal circumstances. Therefore, it is not intended to be a substitute for specific, individualized financial, legal, or tax advice. To determine which strategies or investments may be suitable for you, consult the appropriate qualified professional prior to making a final decision.
Hey everyone, welcome back to another episode of In the Market Trenches. If this is your first time joining us, I'm Eric Fury. This is Gary Reeby. Happy to have you. If you've listened to us before, remember we're available anywhere podcasts are available. You can check us out at inthemarkettrenches.podbean.com. We're also available at snn.network or the SNN Network YouTube channel. That's youtube.com/SNNwire. We're excited today. We have our guest, Kelvin Seetoh. Kelvin, thank you for joining us.
It's a pleasure, and I love the portrait that you have on the back.
Yes.
I saw this on Etsy, and I just had to get it. We had to commemorate this period of time.
I bought a mug that has the same guy. You know, I bought it at Etsy as well. It's still not here yet.
Yeah. We need to remember this time somehow, and so we're doing it with our poster.
Yeah, man.
So thank you for joining us. For people that don't know you, do you mind starting off by just kind of sharing some of your background, how you got involved in investing, and kind of what the strategy is right now?
Sure. So hey everyone, it's an honor to be here, and thanks for inviting me to your show. So for me, I did not really come from a very well-to-do family. I'm actually born and raised in Singapore, so a very typical Asian, right? And I think Asians, we are usually being taught to work really smart, to study really well. So some of you guys joke that in Asians, we are really good at mathematics. We go in and we take on all the mathematic stuff in US as well. But I guess, that's really how we are being raised, a culture that we have in Singapore. And I always wanted to be the top in school. So I actually studied a business. I studied banking as well. And I always realized that, I somehow, or rather I could not, when you can get A, that's a nice grade, right? But you want to be top in the class, that requires a whole different ball game. And I tried for a few semesters and I couldn't get the grade that I couldn't get the ranking that I wanted. I grew a bit frustrated. I went to my lecturer, who was formerly a fund manager. And he said, you know what, Kelvin, if you're playing at a game and you're losing every time, what does it mean? That you suck at this game, why don't I challenge you something? Why don't you play at a game where no one is playing at for your age, right? So say here, listen carefully. There's this book called The One Up on Wall Street by Peter Lynch. Go and read it. Right? I took that book, I read it, and it gave me the confidence that despite being a young kid back then, right? There was this chapter that's saying that a group of young kids have actually outperformed the fund managers by choosing stocks that they understood the most. And that gave me the confidence to say, hey, I may not have a degree yet. I may not have that qualifications, the MBA, the investing experience, but that doesn't stop me from investing. So I started really applying what I've learned in school and what I've learned from the book into investing, right? And I started to write on forums. And I really believe that despite being a young age, it's very important for me to put my ideas out there. And, cut the story short, in Singapore, we have to go through national service. And by the time I was supposed to complete my national service, I was being offered a job as an analyst working for a fund. So I also gave up my university placement, so I didn't go for the degrees. I gave up my scholarship, which is a prestigious scholarship with the Singapore government as well, to work there. And I think I was quite grateful for the opportunity. I gave it my all. I worked really hard. I started analyzing a lot of Asian companies in Japan, a bit of Australia companies as well. But it came to a point of time I realized that maybe when seeing the number goes up, after a while it becomes numb. You see the P&L goes up, it becomes numb. I was just searching for more in my life, and I did not really travel much as a young kid. Since I was young all the way to adulthood, I wasn't traveling. I was just working hard, just like a typical Asian, right? This is like stereotyping, but yeah, we are like that. We just work really hard. So I decided to say, hey, my portfolio has grown a certain size. Why don't I travel around the world? And I traveled around Asia for about a year and a half, really to understand the culture, understand how people think, understand what the opportunities that we have in Asia. And by the time I came back to Singapore, I got invitations from people to say, hey, could you teach me about investing, right? And I thought that whatever I knew, I thought it was just really simple stuff. But I didn't expect people to say, hey, I'll pay you $100 for an hour. Could you teach me something that you know? So I did that for a while. And one day I went home and it was late at night. I sat on the sofa. It was my mom just came up to me and said, hey, son, aren't you sort of financially comfortable? Why are you doing this? And I thought to a moment and said, yeah, why am I doing this? Why don't I create something more scalable? Instead of doing one-to-one, I do it like a mass class, right? Like 1 to 50, 1 to 60, whatever it is. And that was really the start of what I was doing, teaching people. But I also guess after a while, people ask me, do I want to manage funds for them, separately manage accounts, SMAs, right? So I started doing that last year. So that was actually something a natural extension of what I believe in. I think at the end of the day, as investors, we also have to teach people as a form of contribution. Then I feel there's a tangible benefit to the work that I do. But in terms of investing philosophy, I think I've shifted a lot through my own experiences, through my exposure to people in America when I speak to them, how they were investing. How I wish I actually started investing in America much earlier, because in Singapore, we don't really have, I just have to be honest here, we don't really have a lot of companies that you would deem as compounders. We have very limited addressable markets. The government tends to take those very lucrative industries. They tend to do a lot of control. It's not like an absolutely free market as compared to America. I was investing in companies that I would say have absolutely stagnant value. So I was just playing the multiple re-rating and recycling and just doing things as a cycle. But as you could imagine, obviously that's not a scalable strategy. That requires a lot of work, right? So I eventually went to US and I saw a lot of new companies. Some I know of, some I do not know of. But today the way I invest is really about a growth investing strategy. I have a very high benchmark for the companies that I have in my portfolio, because I do believe that as investors, we are really lucky to have so many companies that's around us. And we tell ourselves, what are the top 5 companies that could make it to our portfolio, right? Then you really want to think about the really outstanding ones, right? And if anything that don't meet your criteria, they should not be in your portfolio in the first place. That dilutes the returns and that dilutes the quality of your portfolio. So I'm very comfortable with loss-making companies. In fact, I think growth is a key component to that. I think we look at positive unit economics much more. But I think over this whole duration, I also learned a little bit more about investing. I realized we are not just investing in companies, but we are investing in people, a visionary, a person's ability to execute, a person's ability to attract like-minded people to go on the same quest to create products that will kind of move the world forward. I think that's really important. Like, what's the value proposition of your product, right? Could there be any other substitutes, right? So I also narrow my choice of industries to a few. One of my favorites, of course, is internet businesses. I think they tend to scale beautifully. So I just want to share that I do own shares in C. C is one of my favorite companies, but I also love companies in the medtech industry. That's where I'm actually spending a lot of time to expand my circle of competence, because I do believe that they are actually providing a better quality of care to patients in many ways. And I think we are living in an age where we have a lot of innovation to really make the world a better place. So to sum up, I think we are living in exciting times. I think investors that collaborate more, that actually put their work out there, will tend to find more successes easier as compared to investors who are just doing work by themselves alone, in a small room.
So when you started out investing, it sounded like you focused mostly on Asian markets, and then you started to transition to US markets. Is that right?
Yeah, and I wish I had done that earlier, because my compounding would have been faster. I mean, typically the kind of returns you can get in the Asian market, talk about Singapore, if you get a 15-20% return, that will put you in a good ranking in terms of Singaporean investors. But hey, you go US, people making 80-90% is kind of the norm, because they are really choosing companies that is in a hyper growth mode, right?
So do you have any trouble making that transition?
Yeah, initially I can tell you that In Singapore, I think we do have a statistics to say that the percentage of population that has a brokerage account actually is very low in Singapore. And also having a brokerage account also doesn't mean that it's active, right? So those active ones are not a lot. So we can say that in comparative, relative to US market, Singapore stock market is very sleepy. So there's sometimes you have one significant press release, but the share price still doesn't move. It's kind of sleepy, right? Which means the share price is not volatile at all. And that is what I'm used to, right? So when I went to US, okay, oh boy, this is going down 6% and 9% the next day, and it kind of had those swings. So that was something that I have to get used to. And also kind of learning what your thank yous is basically the language that SEC puts out, that 14A, and also knowing who are the investors that I could actually follow, could actually network as well. But I guess after a while, I just have to make the move for myself. If I just want to compound my money much faster, right? Anywhere I believe the best businesses are, I would go to. And I think I owe it to America's free economy. And I think as long as you have a big dream, you want to make it happen, I think America is the place to go. But I still love Singapore.
You chalk up those differences. No, I think we largely agree, and we've identified, I think, for us, as we have stuff that we do, and going outside the U.S., it tends to be kind of there are market structure issues that just aren't appreciated by a lot of folks in our industry as they venture outside the U.S., and they sort of do it in a way that's a little less witting. So if I'm understanding sort of your description of sort of why you chose to focus more on the U.S., there's some level of government there's more level of government involvement in sort of the Asian public companies, either through ownership or whatever kind of interest the government is taking. Was that the primary? Am I correct in that's the primary driver? So that sort of limits, in your view, the upside associated with investing in those markets?
Yes, I would think so. And also in Singapore, I mean, in Korea, in Japan, we have a lot of family-owned businesses. So sometimes you put your own people in place, and how can you be tough on them, right? If they don't perform well, you still let them stay there and draw fat salaries. And I think in US, I'm not sure if I'm getting this right, but if the management is not doing a good job or whatever, shareholders could just throw a lawsuit at them, right? I've seen it a few times.
I mean, they buy a part of the company, they file an activist thing, some presentation or whatever, and they embarrass. There's a lot of public shaming that can go on, and if you make enough noise, sometimes you get some change. And there are instances in the U.S. where that's not really possible. But as investors, Eric and I, when we read a proxy and we see a lot of people with the same last name or a lot of interfamily connection, like that's at least a yellow flag, but in a lot of instances a red flag, depending on who it is. It's surprising to me that people don't have that as a consideration when they go outside the U.S. They don't think about that, but that's very, very common outside the U.S., probably even more so than in.
Yeah, I mean, you're totally right on that, because sometimes when you want to be activist in Singapore, go get another job. You suddenly have successes in that. But I mean, in US, some activists do succeed, and that kind of tells people that, hey, you stand a chance, you have a fighting chance. At least it has been done before.
Right. Yeah. So you mentioned your evolution. You started out, if I'm understanding this correctly, sort of with the Peter Lynch approach as a youngster, that sort of morphed into what I would describe as sort of quantitatively cheap mean reversion trades that you were doing in Singapore and other Asian markets. And then you sort of evolved to somebody who's looking for more compounder type investments. I don't know if it'd be correct to say a compounder bro, but that's, but that's sort of where you are these days. Is that fair?
Yeah, I would say so, because at the end of the day, if you look at every corporate life cycle, we call this the S curve, right? Like if it's proof of concept, you have commercialization, then you have the scaling process. And I think very importantly, I can't remember where I read this before. I read this quote before. It says that, well, you can be wrong on valuations, but you absolutely cannot be wrong on quality, because if you are wrong on valuations, it will be self-corrected, right? But if you're wrong on quality, even if you buy a company that's cheap, you're gonna go hell, because at the end of the day, if it's a rotten rotten apple, rotten business, no matter how cheap you buy, you're not going to make money on that. So I focused a lot of time, analyzing the qualitative factors. I think also doing very thorough due diligence because I am also considered quite a concentrated investor. I hold less than 5 stocks. I think it's easier for me to focus, and I try to watch it like a hawk. And I think sometimes my biggest position may not be the one that has the highest upside, but it's the one that has the highest level of certainty, right? So again, the reason why I like C a lot, because you look at Google Trends, you look at traffic visits, you look at app rankings. These are things that are very visible. These are I have ample alternative data to actually support the case to say, hey, next quarter is it going to be a good year? Or if let's say I don't own this stock, but just for example to say, we have this edge computing CDN business called Fastly, right? We ask ourselves, for Fastly to grow next quarter, what are some signals? What are some telltale signs? How can we tell? I don't think I can find it that easily. So, I feel like, if I'm just going for the highest upside without certainty, I feel that's a recipe for disaster for me. I think in anything that I do, I can do it with lesser returns, but I want to have more certainty in my approach. It comes to investing.
And so what are your markers of, you said quality, right? And then compounding it. So, what are your markers of quality? What are some of the things that you've noticed historically in businesses that you've been involved in?
I think
quality to you.
Yeah. So, I get your question, right? Your question is asking like, what are some quantifiers or what signifies a quality business?
It doesn't need to be a quantitative insight. It could be a qualitative one. It's not but for what's sort of your definition of quality, and how has that evolved over time?
Yeah. Last time when we talk about investing, we talk about networks effects, we talk about brand, we talk about efficient skill, but that was what I was being taught, right? But as I grew a little bit more into the investing world, I realized those are actually the after effects, right? Things that already happened. It's only after it happened, then you can see it. But what's before that, right? This was what creates this thing called emerging modes, right? And I think emerging modes just comes with something that's very basic, right? It's actually the product utility, how valuable, what's the value proposition of this product in comparison with the alternative products, right? And I don't think it's just that alone, but it's also the customer obsession, right? How does the customer feels? I feel like when we look at Costco, right? Costco is always giving people the feeling that consumers are always getting a better end of the deal, and which creates loyalty, which creates a huge word of mouth as well. So the way I look at it is that I feel there's always two things that goes very well in business: is customer obsession, and number two is the value proposition. But I think a value proposition is not just that alone, but it's like, how can a business incrementally add more value to the consumers, right? So I do not own this company, but just an example, right? There's this company that I know of called Wix, right? Wix.com. Wix is actually a website builder, right? So now I got you covered on your website builder, and I realized that many people actually uses my website to actually open e-commerce stores, right? And they need payment solutions. They need website hosting. They need when they don't want to design a website, they want to have a low code, right? They just drag and drop, and then that makes it easy. Make your life easier. So slowly but surely, Wix has been taking over a lot of functions of what the customers truly need, right? It's a well integrated tools provider. So I also feel that as you consume more of the tools that is being provided by a company, in a way you are being trapped, you are being tied into the ecosystem. And I also feel that that makes the product mission critical, right? So for example, maybe in some broader sense, when I talk about quality, is that a product that actually helps end user to generate more sales. For example, if I'm using Shopify, so I don't own shares in Shopify, but let's say if I'm using Shopify, and Shopify as a platform, to many of my friends, they told me that Shopify is like a lifeboat to many affected merchants, right? And that is actually a very mission critical component of their business, because if they just cancel the subscription to the Shopify, essentially they're closing down the store. So I always think about what is essential, what is mission critical, what is sticky, and I think I have a huge preference for revenues that are either repeating or reoccurring, right? Reoccurring could be subscription, repeating could be Visa, Master swipes, could be because I love the e-commerce platform Shopee so much, which is why I always go back, because this is a behavior, this consumer behavior. So I think there's a lot of ways we can look at quality, but then it's not really easy to describe. But I feel like if I could describe it in a simple language, it's really how can you retain a customer and keep a customer happy, right? Because if your customer is happy every single time when they transact with you, then it's going to be a not just a one-time transaction, but it's going to be a lifetime value, and that's going to be beautiful, right? Because you have a good experience, they're going to share it with their friends, and I feel that really wonderful businesses, they tend not to spend a lot of sales and marketing because their customers are their extension of their sales force, right? So I think it's the same example of Costco or Amazon. That's how I look at it.
What was it? Was it Jeff Bezos that said that marketing is the price you pay for having
inferior product?
What's that?
Yeah. Marketing is the price you pay for an inferior product.
Yeah.
Yeah.
Right.
That's the one. Yeah.
Having an unexceptional product or something like that. I'm butchering the quote, but it's something along those lines, I think. I'm pretty sure it was Bezos here, wasn't it?
Mm-hmm.
All right. Cool. Everyone's fact checking me. So it sounds like you've been on quite a journey to get to the point that you're on. How long did this journey take? Like, how long have you been doing it?
I'm a bit embarrassed to say this. I'm investing close to 10 years right now. But I would say the first 4 years I was in Singapore, investing by myself. I wish I had someone who could teach me. I wish I would have that exposure. But I learned throughout the years. So one thing that stood with me, a friend of mine who told me, if you feel like you are always the smartest person in the room, it's time to switch room. So it came to the point, I hope I'm not sounding arrogant here, but in Singapore market, to master the Singapore market is relatively easy. And I felt like there was not much of a challenge anymore, right? In terms of understanding business models in Singapore, because it's really very simple business models. We don't have software businesses, don't have too many software businesses in Singapore. So I wish that I've told myself to actually look in the American markets much faster. So I think when my wealth started to compound a lot better is only the 5th year onwards. So I think the first 5 years, I'm not sure what I was doing, okay? But I'm glad that the second half of the decade, it became a lot better. Otherwise, I'll be quite sad about it, all right?
Well, I mean, if you're not evolving, I think it's if you're not growing, you're dying.
Yeah.
It's sort of our view of the investing.
Yes.
That's our view on things. If we're not learning something, it's a day wasted, and if we're not evolving a little bit, it's we're getting worse. We're not getting better. So
I agree with you.
Would you be just willing to share with us maybe an investing experience that you learned a lot from? Something maybe either you're not involved in anymore, or just whatever. What's next? Because a lot of times we find the experience of owning something and having been through the ups and downs of it, and maybe it worked out, maybe it didn't, but like that experience, is usually the best teacher. And usually it's usually when we learn something, usually we lost money when we learned something. We always count it as a blessing when we learned something and we didn't lose money. So is there an experience you'd be just willing to share with us? And
take us through the process, how you found the name, how you initiated some of the research.
Maybe what you thought at the time, and then as it evolved, how your thinking changed, and sort of maybe just some of the lessons learned.
Yep. So do you want me to start with a Singapore one or America one?
Your choice.
Okay.
Best choice.
Let's do Singapore first, because I'm guarantee we'll know practically nothing about it, but we'll have the most naive questions, but they might be better ones.
All right, sure. So in Singapore back then, I invested in this company called Hi-P International, so HI-P International. So that business has been privatized by the founder. Okay, so what they do, they are an assembler for iPhones, right? So at the point of time, iPhones, I think it was 2016 or 2017, yeah, around there. Okay, I think
The Singapore version of Foxconn, is that a fair way to think about it?
I think it's, yeah, I think you could say that. You could say that much smaller in scale, definitely. So they have a client called Apple, right? So they're manufacturing iPhones for them. I think in typically, if you look at the value chain, OEM, original equipment manufacturer or subcontractor, they don't earn fantastic margins, right? So at the point of time, I don't think I was investing a lot in America. I was investing a lot in Singapore. And I do notice that, okay, you have a revenue that's growing not at a very rapid rate, perhaps about 15 to 20%. But what the business is doing is that they are reducing a lot of operational wastage in the business. So what you see is that you have a business that has a 1% margin moving up to 2% margin. Just like that alone, you have a 100% increase in operating profit, right? Just because of cost efficiency. But I also do know that there are certain limitations to cost efficiency. You still need at the end of the day, you still need manpower to actually run your business. So there's a certain limit to that. So I was looking at that, and I was looking at that, and I was saying, this business from an enterprise value to a free cash flow is trading only like 4 to 5 times. If I look at comparable peers, actually it's really, really low. And if they can push it up to be about 3 to 4% margins, I think that would be really, really great, right? So I look at it, I think, okay, there's a lot of high possibilities doing that. In fact, it has started taking effect already. And I say that if I'm in for about 3 to 4 quarters, I'm sure I'm going to make a lot of money. So
was part of the idea that their business was growing and they would get some operating leverage on their cost base, and so that 1%, that margin expansion would come from operating leverage as opposed to like cost cuts. Is that a fair way to think about it?
Yeah, I would say you have some 4 to 5% top line growth. You have that cutting of your operational SG&A costs. So you have a huge operating leverage that comes from both sides, right? So I tend to be a concentrated investor. I look at it and say, hey, this is too great of an opportunity to kind of like pass it up. So it became a very big position for me. I made a lot of money on that, and I think, I actually then sold the stock, feeling like I'm a champion.
You feel like a genius.
Genius, yes. This kind of sad talking about this, but 3 weeks later they declared a dividend, a jumbo dividend, huge one. Okay, so context, right? In Singapore, we love companies that pay dividends. So when they declared the dividends, the share price actually jumped once more. And after the dividends being paid, of course the share price went back down a little bit, and then next quarter they reported a huge growth in earnings once again, and the share price proceeded to double up again. So I would say that, if I held on to the stock at that age, I would have been a millionaire already, So of course I didn't really, I sold too early, right? So that's my lesson. And sometimes I think about it. I was kind of sad because, if I would have held on for maybe just another 3 to 4 months, I could have bought apartment in Singapore with full cash down, right? I don't have to take on any debt and loan, and that's a lot of money. I could travel around the world. Maybe I might not be working already today, because if from then I compound my money onwards. I felt like I let myself down, and I felt like, despite thinking that I'm good in investing, why did I sell it early? But looking back, it was a lesson that I've learned to not sell too early. And I think sometimes, maybe as a young investor, I've never seen such huge P&L on my portfolio before, and it kind of scares me a little bit. But I feel like sometimes having that investing knowledge alone will not make you rich, but you also must have the psychology and the temperament to manage huge amount of money, that you must be comfortable with huge numbers, right? Because sometimes huge numbers, while we think that it's nothing much, but when you see huge numbers on your portfolio, you might feel like you might lose it anytime. So that was my feeling as a young investor back then. Of course, it took me, I don't know, it sounds, it's supposed to be a celebration, right? Making so much money, but it turned out to be something I was quite sad of, because it doubled after the price from the price I sold it. I was feeling a bit depressed 2 to 3 months after that event, because look at the share price that keeps going up, but I said to myself, that was a great lesson that I took away, not to sell stocks too early. In fact, I also asked myself, I mean, now in US, right, applying that lesson to US, I think US is a great place. We have a lot of great companies. In fact, a lot of businesses that are outside of America wants to live in US because of the valuations that they can get as well. And so I truly asked myself, what are the companies that are truly exceptional in the world, right? I don't think there are many. I think there's only a few really good companies that are well managed. So if that's the case, right, then just borrowing a sentence from Buffett, right? So when's the best time to sell? It's really never, right? So because of that lesson I learned back then, I held on to really good companies for a long period of time. And today, I'm looking back, I'm pretty glad that, I actually sold early and went through the experience, because if it went through and I still did not learn my lesson, or maybe sometimes to simplify things, right? I think all of us will just have to go through those lessons to just become a better investor over time. So I still have some bit of regrets as I'm speaking right now, but I think I should just drive looking forward and not just keep
So
looking
it sounds
at
like with that particular company, you sort of had an idea of what it could or should be, and
And it also sounds like you have a time frame which you thought it would play out. You said 3 or 4 quarters.
I mean, it was the lesson for you. I mean, it seems like that's that like, as a contract manufacturing business, it's not the highest quality business in the world. So would you be comfortable really holding on to it that long, as it was anyway? I mean, as opposed to something that had, really great returns on capital, sort of open-ended growth runway, it seems to me like when you just let's take away the names and just say, like, you've got a contract manufacturing business that has some capital intensity and is low margin versus something that has open-ended growth and better margins and returns on capital. It seems to me that maybe one of those is just easier to hold for a long time and allows you to be more permissive on the valuation. But maybe I'm thinking
I think you're right. I went with a game plan that I would hold in a few quarters, but I came out too soon before the full potential and full margins was being realized. But despite that, I think the same lesson I've still learned. In a case, before even a company have unleashed its full potential in terms of growth rates or whatever it is, the margins, if you sell it too early, I think that's a mistake.
Yeah. Interesting. So was that experience? Is that part of your pivot to go more towards the U.S. with the open-ended growth runway for some of the companies here? Was that influential in that decision, or was that sort of just?
Yeah, I think you could say that, because then like you made X amount of money, then what's next, right? You probably had what I had to do was to look at another company and just say, how much money can I deploy, and how much money can this stay in that company before I have to recycle, rinse and repeat and recycle, right? Kind of sick of that, right? It's like having too many relationships all over again. I want to be a devoted person, right? So I went to US. I realized, okay, there's such thing as companies that have that's operating in huge addressable markets, that have well managed management who really could execute, and it could be a company name that I could hold for 4 to 5 years, and that seemed to be a lot more easier to make more money, right? So less effort, but more money. And I think every time when I open the books to start researching a company, it's like creating a new relationship with a company. You got to understand the management team, understand the history, the products, how customers thinking about it, what's the net promoter score, NPS. And also, of course, perform maintenance due diligence, right? And that's easier as compared to, restarting the whole due diligence process. So I would say that was partially a catalyst as well.
Mm-hmm. Interesting.
So you want to switch over to the U.S. story?
Yeah.
Let's come home to the U.S.
Let's go.
All right, man. Here we go, man. The land of the freedom, right? Okay. So this company is called Intelligent Systems. Just for
company that you own right now.
Yes. So I just want to disclose that I own shares in it. All right, so just a disclaimer. So, so what a company does is they're actually a payment issuer, right? So, payment processor on the issuer side. So you think about every credit card that's being issued from your Chase Bank, from your Wells Fargo's. Every card has to be processed, right? So the biggest players is FinServe, First Data, Global Payments, and you have a small player called Intelligent Systems Corporation. So how I got to know about the company was Bloomberg actually ran an article on it. They say that Goldman Sachs, they actually partner with this tiny Georgia firm to actually push out this Apple Card product. So, Goldman Sachs, someone that has very high reputation on the street. I would have think that they would have a lot of stringent checks. They want to work with a bigger player like FinServe, First Data, whatever the players are out there. But
one of the bigger card companies, right? Card issuers.
Yep. But they instead actually work with Intelligent Systems Corporation. As I look into the company a lot more, I realize they have incredible technologies in terms of creating flexible payment plans. They are really very agile and they are very forward thinking. So in terms of I hope I'm not going to too technical stuff, but a lot of the old processing environments in the payment industry is coded in COBOL, and that is not easy to modify. So whenever clients want to have some flexibility in terms of the product feature, it's going to be really hard. Intelligent Systems Corporation
technology infrastructure of basically old banking and payments, essentially, right?
Right. But Intelligent Systems is being coded in a modern language, which allows for a modular modification and editing, and that's actually a better product. And I would assume that's the reason why Goldman Sachs went with them. And they have kind of about 20 staff in Georgia, and Georgia is actually where all the payment companies are, and most of their programmers, high value programmers, are based in India, right? So there's this short seller called Grizzly Bear, actually wrote a short report on Intelligent Systems, say that they are nothing but a glorified outsourcer, and they say that a lot of revenues had some round tripping as well. Okay, because you have very high margins, right? It's like you earn in US dollar, but you pay your people in the Indian currency, and basically casted a lot of doubt about the management ability and the product as well. And I also think, to add some fuel to the fire, one of the one of the director, right, was actually someone that has a very great history of fraud activities. So you have this independent director that's questionable, that's in your company, right? That also maybe tells you something about the company. Maybe it's not clean. And furthermore, the CEO, who is Leland Strange, is being rumored, I'm not sure, but being rumored to go to church with that independent director. So they are close friends. So I'm not sure as close friends, could there be some influence in the way how he would have run the company. So I mean, with all companies that I invest in, I spend a lot of time with them, nurturing relationships. So when the short report came out, I think the share price tanked a lot, quite significant enough to raise some red bells, alarms. So of course I did panic a little bit. First time things like that happen. But I think one of the valuable things that I like working in the space, so I invest in very big companies, which I call the flying elephants. But my main core expertise is really into the small microcaps as well. So back then, I think Intelligent Systems was also considered like a small cap. So I had a direct phone call. So I called Leland Strange to find out what was happening. And I think he gave the assurance, although it wasn't very clear, but it felt some assurance. And I also feel what he did subsequently was, a few days later, he did a conference call and to really refute the claims one by one. really, really clear, really, really good. And I think sometimes when I invest in companies, actually, to be frank, to be really it's kind of funny. Like in the first few years, whenever I invested in any companies in the US, most of them, receive short sellers report. I also invested in this company called previously. I don't own it right now. PaySign. It also had a short report, right? So I don't know why, it's just unlucky or whatever, right? But let's come back to the Intelligent Systems Corporation. So I guess at the end of the day, what I've really learned from this whole incident, after Leyland Strange did a clarification, I think the share price shot back up. So I think at the end of the day, what I really learned is that short sellers report, there could be a lot of them, right? Sometimes it could be look as if it's very credible, but we really have to do our strong due diligence to really understand how are the facts arising, and sometimes facts could be misinterpreted, mispresented to actually bring out some fear in terms of the shareholders. So I think it's really understanding the management team, building good relationship with them, never being too close to them. Have to draw the line, but always asking themselves, about their vision, and sensing their character, right? So and I think
it's probably a good gut check. You have a report that comes along that you have something that does something to a position of yours like that, and like
it makes you challenge your own thinking. Did you have any blind spots?
So I was quite thankful because it did challenge my thinking, and it made me more convinced about the quality of the business. But of course, I think short sellers they do play a role, because subsequently, INS Intelligent Systems actually removed that independent director away. So and I think they sort of work a lot more on their IR slides on the website to make it more credible, because their website wasn't really updated, and I think people are thinking there could never be some good technology that's coming out from a website that's in the 1990s or 1980s kind of look. So at the end of the day, I think my learning lesson is really knowing the management team really well. And I think every investor has to do this, because like I say, we don't invest in companies, we invest in people, right? So the ability to read through people, to understand who are they really are, whatever they say, is it really true? And it takes some skill. I don't think I'm perfect yet. But over time, as I speak to management teams, I do like Zoom calls, I do calls, phone calls, I start to get a hunch and a certain sensing about people. I think that's very important. I think overall, not just investing, but you want to be successful in life, you got to know how to read people and know how to avoid people who wants to do bad things to you.
Yeah. It's important. Eric and I have noticed over time that's good to get a base level of interaction with the management team, and then you can sort of get a sense for what kind of behavior, what kind of responses seem a little off from them, like
in either direction. You hear when they seem to be a little bit more excited about something, or if something comes out and they may say everything's okay, but you still hear it kind of in their voice that they could be a little nervous.
Yeah,
exactly.
But with what you think you might hear versus what you actually hear, but it's helpful over time. We've noticed.
Yeah.
Yep.
Okay. I appreciate you sharing both the stories with us. You have a really unique background in journey and how you got to where you are. It seems like you kind of broke away from what you described as kind of the traditional path for you. What advice would you have for someone that's starting out that may be in your shoes that you were in 10 years ago?
Yeah, I mean that's a very fantastic question. So the way I look at it is, like every investor out there, they will have their own unique experiences, like what you guys all call it, the war stories as well. I think if you're a young investor, just get out there, really talk to investors that you respect a lot, and hear from the stories, hear from the experiences, ask good questions like what you guys have just asked. What are some companies that actually provided you the most experience, most learning takeaways, because I think investing is so dynamic, right? And I also think that investing is so interesting. It's like we are piecing puzzles day by day, collecting data points. It's a mixture of human psychology, it's a mixture of marketing, it's a mixture of business. There's so many elements that goes in investing. So I don't think we can absolutely learn investing straight off the books. We also have to blend in a little bit of our experiences. So I think sometimes they say if you want to learn slowly, pick up a book and learn from there. You probably spend like 2 days to learn the contents of the book. But if you want to learn in an assertive manner, then you surround yourself with very high caliber investors. Hear from the stories, right? So like today, as I was teaching a lot of investors, they learn. They didn't have to go through 5 years of my experience. Lost in the desert. Before finding the honey land, right, which is in America, right? But I still love Singapore. I just want to say that, right? So you see, the point I want to put across is find good people with good results. Don't just find people who are making like 5 to 10% returns in the stock market. Find people who are constantly making like 30, 40, 50, even, right, performance consistently, right? So you don't want to waste your time. You want to learn from people who have done it consistently, not just for one period of 1 year, 2 years, but consistently, right? And there is never there's always things to learn from them, right? So I think more importantly, my advice to investors who are starting out, learn to be a good human being, right? Learn how to connect with people, learn how to network with people such that they would love to spend time with you. Make yourself someone useful, make yourself someone memorable, right? Maybe sometimes you could be new to investing, but you could offer things like, hey, could I work for you for like 3 months straight for free? And during the process you learn a lot, right? I mean, you work for free for 3 months, but maybe the lessons you learn could be 5 years worth of lessons, right? So I think it's really how you can add value to people such that people just wants to give you more and more and more, right? Instead of just saying, oh, you want to ask me this question, I may not want to reply you because you're not providing me value in the first place, right? So if I want to summarize things, is be useful to other investors. You want to work for them for free, you want to do analysis for them for free, just go ahead. And second, learn how to really spot good investors, right? Identify them and find out a way on how best you can approach them in a way that they can't reject you. Okay, so just offer up an irresistible offer such that they want to work with you.
I can summarize: put yourself out there and try to meet some folks, learn some things, and contribute to the conversation, and hopefully you get better over time.
You said it really well. Yep.
Yeah.
Cool.
Where can people go to find out more about you or to follow you and hear what you're up to?
All right. So you could actually find me on Twitter. That's called a Slingshot Cat. So if I could spell it out, it's give me a while. It's SLIN SHOTCAP, right? So that's Slingshot Cat.
Okay.
Great.
Yep. So if any one of you guys follow me on Twitter, just come say hi. I think it's always nice to connect with more people on Twitter as well.
We will be doing that.
Great. Thank you so much for being on the show, Kelvin. We really enjoyed it and we appreciate it. Good. I said, and for anyone else that's listening, remember, you can check us out anywhere podcasts are available. It's inthemarkettrenches.podbean.com. We're also available at snn.network or the SNN YouTube channel. That's youtube.com/SNNwire.
Yep.
Kelvin, thank you again.
Thanks a lot, Kelvin. This is great.
It's a pleasure. Thank you so much for having me.
Thank you.
The information in this podcast is educational in general nature and does not take into consideration the listener's personal circumstances. Therefore, it is not intended to be a substitute for specific, individualized financial, legal, or tax advice. To determine which strategies or investments may be suitable for you, consult the appropriate qualified professional prior to making a final decision.